Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES was very balanced and simply consolidated within a range. Heading into the open, we have two important econ reports out at 9 a.m. Central. The ISM number and construction spending is due. And at this point, it looks like the market is simply balancing in a range ahead of econ. We're going to be using 73 quarter, 75 quarter as the micro bull bear zone. That's the area where buyers can maintain control as long as they hold above it. And overall, contextually, we're still balancing within a wider range, and now even short term in the overnight session, we're balancing in a range. So the bias is not extremely bullish or extremely bearish. We're simply waiting for econ and expecting a directional move once the econ reports are out, and it doesn't have to be a trending move. It just means that since we're going to be so balanced heading into it, we could get either an upside breakout and go test 86 quarter to 88 quarter, 90 to 92, or get a downside break and test 64 to 66, potentially 61, 62, depending on the momentum and how weak the market's looking in real time. Could go a little bit lower, but that is the lower end of balance, and going from 76 down to 64 to 66 or 61, 62, on first test, that can still attract responsive buyers. So right now, that's how the context is shaping up. Again, it doesn't have to be a trending move. It just means that we're going to get a directional push one way or the other, and then we can still have responsive buyers step in at the support zones or responsive sellers step in at the resistance zones. It's just that we're going to have to be cautious fading that directional move because it could still be a directional morning where we still get some sustained movement until the market hits a spot where either we get profit taking from the other side or it's overextended in that direction, and then the other side steps in and kind of starts balancing it out a bit. But aside from that, the 73 quarter, 75 quarter area will help us establish that bias. And if we're holding above it, holding above 76 half, then we want to be cautious on the short side. And then once the econ's out, if we're trading above 79 half to 81 half, that can quite easily result in a move to 86 quarter to 88 quarter. Perhaps go up and tag that naked VPOC at 90 quarter. Those are all moves that are pretty doable. And then if we break down after econ, then of course the 64 to 66 area would be in play. 68 to 69, we have some minor support. It's a previous swing low from Friday, so there could be some activity there, but with the overnight low at 71 half, I think there's a chance that ES could go down to 64, 66 at least before we get any decent move to the other side. If you're watching the other markets in Nasdaq, holding above like 35.10, maybe something like 35.07 to 35.10 would tell us that the buy side is still intact. For TF, holding above 25 would be a sign that buyers can still enter. And then in TF, a break above 29 to 30 would confirm that we're getting some pretty decent buying in the market. So those are some levels to keep in mind for NQ and the Russell. Aside from that, right now there's no clear directional bias. We're simply balancing and consolidating, and that can continue in the first half hour heading into the econ reports, and then once the econ's out, I think we'll get some better conditions. But so far, the market is just stuck in a range, and we're looking for a break of the overnight range, and looking for a directional push once the econ's out. So we will be very careful and not very active in the first half hour. Probably either no trades or maybe one trade if something really good sets up where ES overextends in one direction, then we could consider a small trade ahead of econ, but the better trades I think are going to come after the econ reports are out of the way, after 9 a.m. Central. So those are our main ideas heading into the open. Let's see where we're trading in relation to the micro bull bear zone after the econ reports, and we'll take it from there.